Well, good morning. Once again, we are covering Alphabet today at record highs, while other stocks are struggling, including Nvidia following its earnings earlier this month. And that has also seen Google a surge since the release of Gemini 3. But it's not just that, of course. Um, there are other reasons as well. Google, however, was the cheapest in the Magnificent Seven few, well, I would say months ago, and is now up 68% year to date, which is double Nvidia's return. So, what's driving this rally? There is three major catalysts. First, the release of Gemini 3 on November 18. It's the most advanced AI model that's now state of the art in reasoning, multimodal understanding, beats every other model, including GPT-5 Pro and on key benchmarks. And obviously, that has renewed confidence that Google is not just falling behind in the AI race. Second, we have had a disclosure from Warren Buffett's Berkshire Hathaway of an around 5 billion stake in Alphabet. That's, of course, provided around 1.5 billion in value for Berkshire, says the disclosure. Third, and this is the big one, Meta, there has been rumors that is going to buy Google's TPU chips for its data centers instead of Nvidia's. And that now challenges Nvidia's dominance and positions Alphabet as both an AI software leader and a hardware competitor. Okay. On top of this, of course, you've also got the Fed rate cut expectations, which have surged to around 85-90% for December, following dovish comments from Waller and Williams. Lower rates are supposed to support growth stocks, of course, but we don't see that there being such of a catalyst. It's just a supporting element, I would say, right? Now, on the technicals, um, we are see, of course, an 8-month consecutive acceleration. We are looking at the monthly chart, but we are on the monthly at extremely overbought levels. And something that is, I think, a bit more important is that if we look at the very long term, Fibonacci extension from down the like $5-6, 21 high, November 21 at 150. Then you've got the December 22 low at 88, right? We have found critical support, a critical resistance at 161.8, Fibonacci at 317. We have gone a bit higher up than that, obviously. And today we have a short trading day, but we're not here to talk about the day per se, right? We're here to explore and analyze and identify opportunities. The next leg to the upside in the long term is 370 plus. And the best way to look at this, in my mind, is to use Elliott waves because we are currently haven't even seen the longer term primary wave. I would probably just say it might be cyclical, but yeah, let's just keep it there for now. Why we haven't seen that? Because Elliott waves expand in or move in 5 waves, right? When we have impulses. So one of the reasons we're not yet done. Hold on, because my view disappeared here. There we go. So let's quickly fix this. What I am looking at here specifically is that internally we also have something like that. We have to. Because why? Because we are looking at always 5 waves. So internally, okay, we haven't finished 5 waves. We have done one and two, and we have done a third wave. That means that the best thing we can currently do is go and also measure that internal leg. Wave one and wave two, it's probably a flat. And if you look at this, we have a cluster exactly at the 161.8 Fibonacci once again. And that tells you that this is going to be a hard level to take out. So there is, since this is the 1618 as well, a high chance of a pullback down below the $300. Okay, probably even closer to 250 before we surge higher towards 360 and 370. And don't forget, guys, we're looking at the monthly here, right? Now, if we go down on the weekly, we do see that the RSI has reset at the lower end of the overbought area and surging higher. We are nearly at 83. So these levels aren't levels that they hold often, okay? And to me, and since we're looking at this from a Fibonacci perspective, we could potentially see prices moving from where we currently are down towards wave 4 and then continue further up. This is a Fibonacci, an Elliott Wave channel, we can say, where typically, because this is the normal trend to the upside, this is the accelerated trend to the upside. So this is the base channel, right? The base channel, typically the top holds the wave 4. So if something like this happens, indeed, we're going to see a pullback. And that pullback can take us down towards 250, which is kind of supported from the channel. There is also, of course, the accelerated channel, as I said. In the accelerated channel, we connect waves 1 and 3. Okay, so in this particular case, we will go ahead and connect the 1 and the 3, and we'll come down to 2. Okay, and this is the 2. Now we're going to extend that, and we'll see where wave 3 brings us, wave 4. So this particular case, as you see, still tells us that, yes, we of course could see some sort of leg to the downside, but the 280, the 138.2 might hold. Actually, I will go ahead and I will put also the 1236 over here. Or maybe I will just go and do the 7-2. You've got this zone here between 250 and 280 or so. You've got this zone. If you lose the 290, then probably we're going to go and retest that bottom, that channel bottom, right? So these are the two channels that anyone could draw to really understand perhaps that where this could go. Now, the RSI also tells us that there might be a time for a correction. And typically what we do get a wave 4 and a wave 5, right? Which is what I'm expecting. Typically also comes and resets the RSI, and then the second leg to the upside fails to reach the previous top. And this would be the exact signal that the RSI would tell us there is a divergence now in the fifth wave between the 3 and the 5, and that we might see a deeper correction after that. And that deeper correction, of course, also matches the longer term structure, right? Because let's not forget, in the longer term, we're looking at the third wave, okay? And then the fourth, and then the fifth. So in the long term, okay, in the long term, well, it looks like Alphabet is not nearly done, right, in the long term. But in the short term and over the next following weeks, I expect pullbacks. Now, is December going to be a month where we're going to see prices extend higher or not? This is something that is unknown. Okay, but if we also Just go on the daily and we'll look at the internal structure again in a similar vein, 1 and 2 and 3 and 4. You've got a potentially fifth wave ending here in the shorter term. Why? Because internally you've got 1, 2, 3 and 4 and 5. Okay, so there is a 5 wave completion unless we see this as 1 and 2, and these 3 we get a short pullback as 4, then 5, maybe wave 3 is going to get done around the 340, then we're going to see a correction. Okay, so these two scenarios could play out. Either way, a short position currently, this is how I would play it, okay, is not the upside, I mean, is kind of limited, right? So and the downside towards 280, okay, and above, we're just going to put this above the channel, okay, it gives a good risk reward ratio because 280, as we see, is a level. 290, even say the first target would be a 290. We're going to use the Fibonacci extensions as supports and targets. So in the first case, the 290, in the second case, the 280, and then you let the rest run down to the channel, okay, with a trade and stop. At break even, of course, which is at 290, as we say, okay, well, not exactly break even is the 1/1 to be fair, but if you close here, if you take some at 1/1, fine, but if not, you can just move your stop to your entry when you get down to 290. Then, of course, in a similar manner, when we get down to wave 4, we can look for potential long opportunities. Obviously, we'll have months to see this take place, probably. Okay, so it would be interesting, of course, to follow that trade idea in the short term, medium term, and also in the longer term. So bottom line, traders, Alphabet is now a clear winner, of course, of the Magnificent Seven this year, driven by Gemini 3 launch. Okay, potential TPU deal with Meta to supply chips and rising, of course, Fed rate cut expectations. Technically, we are at a very extreme level, 161.8 cluster as well, and RSI is screaming, pull me back. I expect a wave 4 correction towards 290 to 80 before a final wave push to the upside to 380, perhaps 400. But as I said before, December might be still positive. 9 months up though would be extremely rare, and given these technical extremes, the risk reward favor really favors patience. So I would wait for a pullback if you don't want to go short in the short to medium term. And if you do trade the correction, trade it carefully. Drop your accounts in the comments and make sure to follow for more macro plus technical trade ideas.